Kevin Hincks is with me, second day here live in New York. Kevin Hincks, co-host of Fast Market, and we have a lot to discuss. I know you're dying to get to the PCE, but should we talk about how the vibe we have here? We still have some up arrows, though we're off the highs.
Again, day two, a number, economic data that wasn't perfect, not great. Core PCE year over year drifting up to 2.7%, but market higher and kind of shaking off data. Remember, there's other headlines out. Trade deal with China moving along. Howard Lutnick talking about 10 more are ready to go, including India. So there's good news there. There's just the market wants to go higher unless something derails it. And today's PCE number, though not great, didn't derail it as of yet.
How do we look for the Fed cut in July? I mean, it's at the end of July, so they have a lot of time to still get.
I'd say July is still not there. Neil Kashkari came out this morning with some comments. He left 2 cuts in the S&P, but he thinks September is the first cut. That's what he sees. So you're starting to get, the things are starting to come into focus. July might be too quick for July. They'd really have to turn the ship around pretty quick with the narrative. Right. I just don't see that percentage getting up high enough, but they start to guide for later. And I think September, like Neil Kashkari was talking about, might be the target zone.
Yeah, you know what's really interesting? The whole Federal Open Market Committee, they all seem to be on board, right, with what the message is. This sort of, yes, some are leaning more towards a cut sooner or later or whatever, but I was looking at some statistics about Volcker and Yellen, and you probably saw some of the same about the dissenters over the years in Greenspan and Bernanke, and Volcker had the most dissenters within the Federal Open Market Committee, so I guess he was just sort of going rogue, Paul Volcker, and then, you know, Yellen was right around 7%, but it's only 2% of the committee actually dissents when we've seen the moves, because they've really been translated. I guess they really are a committee that's pretty solid tight, and that's one of the reasons Trump couldn't replace him so fast either.
Right. Paul Volcker had a different job than all the other Fed members. He had to be unpopular to tame inflation in the late 70s or early 80s. So he was willing to be unpopular, and now he's a legend for what he did with fighting inflation. But he was very unpopular because people don't like to do things like that. But after that, a lot more consensus building that the Fed chairs have done over the years. But Paul Volcker, an outlier. That's why he's a legend.
Yeah, I mean, it was pretty fascinating. It was he was at over 10% of his group, his committee, would have dissent, and it was just 2% something for the current situation.
Sure.
And the others were 4% and 7% roughly. So it just really shows that for right now, there's really this feeling that the economy is on track, and we're in this wait and see mode for the tariffs. And it doesn't seem like anybody's going to go too rogue at the moment. Let's talk about some of the other stuff. You talked a little bit about China and the trade deal there. Do you want to expand on that?
Trade deal signed. They announced it today. They said it was 2 days ago that the signed agreement that they reached in Geneva last month, focusing on for the United States on rare earth minerals. That's the key for us. Obviously, China wants their points, but rare earth minerals, that's the key for the U.S., and that's the backbone of the agreement. So Howard Lutnick, they announced it this morning that it was signed 2 days ago. Now it's in paper, and they said 10 more deals are waiting, including India, a big trading partner of the U.S.
Yeah,
so good
I
news
mean,
there.
Look, right now we have the deal day is July 9th, really. I think a lot of folks think that there could be a chance they'll push off the tariff talk, but maybe we'll get something. That being said here, we're almost at all-time highs. We do have the possibility of hitting that today if things look good. And last but not least, we'll have a Russell reconstitution, right? So we have a rebalancing.
Yes, and before that, consumer sentiment. That we'll get here in about an hour. We'll get some consumer sentiment numbers, University of Michigan. Remember that second look, the late in the month look, is that a little bigger sample size. So we'll see if it moves off those numbers. The current number, 60.5 and 5.1%. Kind of ridiculous numbers that a lot of people have discounted. That's why they've lost some credibility and some faith in some of the sentiment numbers, because these numbers went haywire during the beginning of the Trump administration. But we'll check it out. the market moves on it.
Yeah, and look, everybody wants to know what sentiment is. It's a big part of the story when we look at soft data and hard data. But you can't be flying higher unless sentiment is on board.
Yeah.
Right? I mean, if people are feeling terrible, it's not going to
Right,
go.
exactly right. The question is, does the sentiment data drift towards the hard data, or does the hard data go towards the sentiment
That's a good
data?
question.
Right, because the hard data has been coming in pretty well. Today's number, not the greatest number. The core PCE ticking up 0.2 is not ideal. Some of the government, some of the spending numbers, pretty interesting. $49.2 billion drop in spending on goods, $19.9 billion increase spending on services. So big drop in goods. Took the personal income down 0.4, personal consumption expenditures down 0.1. Not ideal, but like I said, it's all about the inflation numbers. The inflation numbers, though slightly higher, didn't scare the children, Nicole.
I just am so excited about what we're seeing here for folks because they were so downtrodden and distraught when they saw their stocks. Nvidia's 70% off the highs. We're seeing highs that you're at or near highs for so many names. And you've had a great year for so many tech names. I was looking at Micron. We talked a lot about Micron. That's been a great performer. Nvidia's 70% off the highs, up off the lows. I'm sorry. And Palantir.
Sure.
And the shorts have gotten terribly squeezed on Palantir. I was reading about how many people lost so much money on Palantir betting the wrong way. JP Morgan. I think you mentioned Goldman Sachs yesterday. I didn't look at that chart, but pretty great.
Well, it's great when the financials do well because that tells you that it's a pretty solid base for the rally. But you've got some names, you're right. The V-shaped recovery in some of these stocks off the lows in, late April. I mean, pretty amazing. You haven't seen V's like that many times in long trading careers. You haven't seen recoveries like that. And for Nvidia, a well-owned stock with $24 billion float or open shares, to go from 86 to where it is now this morning, closed at 155, probably with the market looking a little higher than that, looking up about 80 cents pre-market. There's another 0.5%. So these are powerful, summer rallies. And you know what I'm watching as an options trader? The VIX. Let's see if the VIX closes below 15 if we stay high. Or
that
below
would be
16
monumental. I mean, we were saying a day ago it was at the lowest levels since February. When we hit our highs, our last highs were the 19th of February for the S&P 500 when we got to that 6147 mark. It was February 20th or something that the VIX was at its lowest point. So we're going to be challenging some of those levels. And I think also I'm going to leave Kevin with this. We're going to pick on Kevin all day long, but I'll leave you with this, with what an incredible quarter it's been, with the S&P up nearly 8%. It's up 7.5% rate basically for this quarter, and it's been an incredible one at that, Monday being the last day of the month of the quarter of the first half of the year.
You know what that tells us? 2 weeks away from earnings season, and we get right back at it.
Thanks, Kevin Hincks. We'll be here for all of that, for sure. Thank you.